Hello everybody, my name is Paul Buitink and welcome to a new episode of Café Weltschmerz. Today I'm talking with Dave Birch about the future of money and payments and identity. Dave is an author of many books, amongst them Identity is the New Money and this one, Before Babylon Beyond Blockchain. And he's a payment consultant over at Consult Hyperion. Dave,
hi.
Welcome in Holland.
Thank you for having me.
Great to have you. Last time we talked was 3 years ago, and the world looked completely different.
Yeah.
Especially in the world of payments and money and identity, things go increasingly fast. What is the latest? What are you working on right now?
Well, probably two sort of broad areas really. So one is looking at the implications of the Second Payment Services Directive, PSD2, the European Directive around payments. And what that means for open banking. So I'm not sure if people realise what a big deal this is, but it is a big change in the banking sector. And in the UK, it's already happened. So because of other reasons, it started early in the UK. So this new era where people can connect to your bank account, I mean with your permission, obviously, and build new products and services that access your bank account. That's very interesting. And obviously if you're one of the big banks, you have to be developing strategies. What is your competitive strategy going to be in that environment?
You're helping those banks defining their strategy.
So that's pretty interesting. And not obvious, because for different banks, different approaches make sense. I think one thing you need to understand is this era of open banking, the competitors to the banks are not so much the other banks, but it's the new entrants. It's Google and Amazon and Facebook and Apple and so on. So
and the big Chinese guys.
WeChat, Alipay. Yeah. So banks have to come up with some strategy, and that's very intellectually complicated and stimulating and very enjoyable work. So I spend my time on that. I'm also doing a lot of work on, as you just alluded to from our previous conversation, digital identity, because for many of the people that I work with, identity continues to be a problem. Identity theft and fraud is getting worse all the time. The lack of an effective digital identity infrastructure is holding back the development of new products and services. And just, I'm sure everybody watching has experienced the same frustration. It drives me crazy. I go to a website, I can't remember what password I used or what username I had. And I just want something to come up on my phone, and I just put my thumb on my phone and log in. And we're so far away from having that at the moment. So that's gone back up the agenda as well. So
right.
Yeah, it's a
lot of
very interesting times. You're not old enough to remember when payments used to be boring, Paul, but I can remember when payments used to be boring.
Yeah. Well,
and now
they're very exciting.
You don't know what's going to happen next week.
Yeah, but we know now, because of the insights of the Bank of International Settlements chief, Mr. Augustin Carstens, that we're not supposed to reinvent money or to create money out of thin air. Like recently those were his remarks. But I was also reading your book, Before Babylon Beyond Bitcoin, I must say. And that was interesting because on the one hand we see a lot of people trying to change the money we use, and on the other hand you see people like Carstens from the Bank of International Settlements that says, look guys, stop doing it, just get on with the real job and let us handle the system. What do you think?
Well, I think certainly to hear a central banker complain about creating money out of thin air is a little surprising.
It's a bit hypocritical.
Because that's kind of how the system works at the moment, and by and large works pretty well. But I think you can see an argument which says, you know what, when we went from an agricultural economy to an industrial economy, we had to create a new kind of money infrastructure. We had to create central banks and credit and bank accounts, all that kind of thing. And so I think even if you don't know anything about the technology, you can reasonably say to yourself, we're moving from an industrial to a post-industrial economy. Perhaps that economy needs different kinds of money. perhaps some of the issues we see with inequality and unfairness and the redistribution of the benefits of globalization. Perhaps those are linked in some way to the creation of new kinds of money, and I certainly think that's true.
So what is the key message that you want to convey with your book?
Well, look, we've been through an era where money essentially became the creature of the nation state. The guy that used to be governor of the Bank of England, Mervyn King, he wrote a book a couple of years ago called The End of Alchemy. Very, very good book. And he said, you have to remember the way things are. You have a central bank and money creation through commercial banks and management of these monetary aggregates and so on. These aren't laws of nature. This isn't physics.
They're social constructs.
Yes, they're temporary institutional arrangements which were optimal for certain kinds of an economy, but may not be optimal.
Or convenient for the people that happened to rule the world at that moment.
Yeah, well, look, I think if you look at the basic statistics, I mean, I don't know how, but if you want to look at life expectancy and disposable income and so on, we've been through a couple of hundred years where broadly speaking that system pretty much worked. We had the growth in global trade. We had the rise in standard of living. I can't remember the figures. I think in the UK, the average person started getting better off in about 1820, and carried on getting better off for 150 years. So and you can say it worked,
yeah.
But is it working?
Could be correlation, of course, but yeah, I see your point. That
Yeah.
there is at least some coincidence between the rise of central banking and the rise of general
Well, look, if you look at the
welfare metrics.
If you look at the UK, for example, actually the Netherlands is a very interesting and very different case study, because the first national bank in the Netherlands, the Bank of Amsterdam, which was founded in the early 17th century, 1605, I think, of course, was founded as a payments bank, not as a credit bank. And the fact that merchants coming to Amsterdam could trade very cost effectively with each other, because they all had to have accounts at the Bank of Amsterdam. Yeah. So all the payments were inter-account payments at very low cost. Greatly contributed to the growth of trade and industry in Amsterdam. And I know that from the UK you have a similar kind of story where the money that was in circulation, which in those days was silver coins, was of very poor quality. So the transaction costs associated with any kind of commercial transaction were very high, because you had to weigh the coins and inspect them, and actually, because of the nature of the transition to a money economy, there actually weren't enough coins in circulation anyway. There wasn't enough money to go round to facilitate the trade. And of course, I think it's funny to think about that, because if we'd have been sitting down at that time, if we'd have been sitting down here in the early 17th century, putting tulip bubbles to one side, given that we're in Amsterdam, if we'd have been discussing how to make money better, we'd have been thinking, well, we need to make the silver coins uniform weight, we need to make them better quality, we need to make them harder to counterfeit. We'd have been thinking about things like this. We wouldn't have thought what we need is a central bank and paper money and a gold standard. And yet, within a very short time, we had all of those things.
Yeah. Isaac Newton played an important role. Eh?
Yeah, he did. I mean, people don't understand. They don't know that part of his story. But it's an amazing story, because what happened in England was, because the money was in such bad condition and it was holding back trade and economic growth, the government wrote to all of the smartest people in the country to ask them what to do. I mean, this would never happen today. I mean, it would be people on Love Island or something. I mean,
or the Kardashians,
or a referendum. Yeah. I mean, it's impossible to imagine nowadays. But the government wrote to all of the smartest people in the country to ask them what to do. And the guy that was the smartest person, in fact, I think, I'm sure I'm not the only one, quite possibly the smartest person who ever lived, Sir Isaac Newton, wrote back with his suggestions, and they made him in charge of the money.
Master of the mint.
He became master of the mint. Yeah. And actually it was his intervention that actually moved England onto the proto-gold standard, which of course then led to 100 years of economic growth and trade all around the world.
So every era needs its own money system in a way. Given the technology available, given the state of mind of the people at that
and the needs of the
moment,
economy.
and the needs.
You know, so there are big parts of the world where there are people with skills, people who can do things. There are needs and desires, but there's no money to actually facilitate the economics. So the idea that the new technologies come along, and on the one hand we can look at them as ways of implementing what we have already. I mean, this is why I think it's a very limiting way of thinking, but it's natural for people to think like this. This is why, you know, if you use the blockchain as the canonical example of the amazing new technology that's going to change everything, people think about using the blockchain to build a stock exchange or something. But we already have stock exchanges, and they already work pretty well, you know, using the systems they have now. We should be using that technology to build new kinds of financial markets that work in different ways, not attempt to replicate rather inefficiently the markets that we have now. And I think one of the clearest examples of that actually is what you see going on in the ICO and token markets, where you have, you know, the underlying cryptocurrencies, which are really only used to provide security for the value transfer.
Could you briefly explain to the audience what an ICO is?
Oh, sorry, initial coin offering. So the idea of an ICO is, I want to start Daveco. Daveco is going to do some unspecified but fabulous thing. So instead of going to conventional capital markets and selling shares in Daveco, or going to conventional debt markets and have Daveco borrow some money, I create Dave tokens and I sell Dave tokens. And you buy those tokens, and right now they entitle you essentially to nothing.
No.
Because the legal structures haven't caught up with it, which is why 9/10 of these things are complete scams and everybody loses all their money. And people will go to jail, inevitably. But if you speak to people in institutional finance, they have a very interesting reason for wanting to use this kind of technology. And the reason is, and you can go back to Bitcoin to illustrate that point. If I send you a Bitcoin, I don't have the Bitcoin, you have it, that's the end of the story. There's no other clearing or settlement mechanisms.
It's irreversible.
It's just done. That's the end of the story. If I want to sell you some IBM shares, we have to go through stockbrokers and a market maker, and then we have to have delivery, and then we have to have payment versus delivery, and all sorts of other things. So the market where I just give you something and it's yours, those things are then called bearer instruments because they belong to the bearer, the person who carries the instrument.
Like cash.
Like cash. Cash is a perfect example of a bearer instrument. So the finance guys are saying, well, you know, when the token markets become properly regulated, then actually we're going to tokenize everything because it's a cheaper and more efficient way of trading. It has some potential other benefits from society's point of view because one of the interesting things about those underlying shared ledger technologies like blockchain is they have a transparency to them that you could be used to make markets work more efficiently and to lower the cost of regulation.
Exactly. Like as an example, I'm trying to move some shares from that I hold in Canada to a Dutch broker, but they don't use the same transfer system of those shares, and the amount of time I'm spending to trying to move those shares and the amount of institutions involved is just crazy, especially since I'm so used to using cryptocurrencies and being able to track on a blockchain what the status is of a transaction, and then being now confronted with all these legacy industries. I'm excited about the future where we tokenize almost everything and we can instantly deal and trade with each other.
It's very funny you use that example because I too have some shares in Canada and they send a dividend check for complicated reasons. It's in US dollars, and I want to move this account and do something about it. So I logged in on the web, and there was a menu on the website. I had to create a password, and they had to send me a letter.
A letter, yeah.
You know, with a thing that I then had to type in because there's no digital identity system. So eventually I get to log in and there's a menu which says to do with moving these shares. So I go and click on it. And the first thing it asks is I have to send them a copy of a void check for my bank account. I couldn't even tell you where my checkbook is. I have absolutely no idea. And you know, the idea that this is the way that you establish who people are and what they're entitled to do in 2018 is insane.
Insane, yeah.
You know, so look, so I think I'm a technology guy. You don't have to listen to me. If you listen to the institutional finance guys,
And you talk to them the whole time, of course, so you have a proper grasp of what the banks are thinking about or what they're talking about.
Well,
and they're basically waiting for the whole ICO crypto market to be properly regulated,
Correct.
and then they will start issuing all sorts of assets.
Correct.
Or they let people issue.
And in fact,
all
if
sorts
you
of
there's a very interesting public. So earlier in the year, I had the good fortune to be asked to chair one of the discussions at Money 2020 in Singapore.
That's the biggest money conference in the world, right?
Yeah,
Money 2020.
yeah. And one of the guys I interviewed on stage, a guy called Jonathan Larson, a fantastic guy, really, he's head of innovation at Ping An, the giant Chinese insurance company, and he also manages their corporate venture fund, which has $1 billion or something under management. And he's not a crazy techno guy like me. He's a serious financial services guy. And he said it on stage. He said essentially, once the token market is regulated properly, we will tokenize everything, because it's a more efficient way of doing business, moving back to these bearer instruments. And the prototypes for the regulation, I think we can already see the outline of it. And some people may prefer the Swiss version, some people may prefer the American version, but in outline, you can sort of see it coming along. There are going to be tokens that are a bit like securities, but not the same as securities. There'll be tokens that are a bit like money, but not actually money. And there'll be tokens which are a bit like, they call them utility tokens for access to resources. And we're not sure exactly how that will pan out, but it's heading in that direction.
But they will all be tied to a identity, so it won't be in that system.
I think the
everything
way
will
to
be
think of
KYC, know your customer, which is of course one of the cornerstones of modern finance. KYC, know your customer, AML, anti-money laundering, all these bank and government endorsed token platforms, protocols will all be based on a proper.
I think what
identity.
you'll see is a layered structure. So at the lowest layer, you'll have the value transfer, the value management with the cryptocurrencies. I'm not sure if those will ever be regulated, because it's not obvious to me what regulation you can apply at that
Sometimes
level.
they can be regulated, right? That's the beauty of a decentralized protocol.
Well, I mean, beauty, that's a value judgment.
Yeah, okay.
So, and I don't want to comment on it, because evading Venezuelan capital controls to some people is good, to other people is bad. I don't want to make a judgment about that. But your point holds. It's not obvious to what extent those can be regulated. But who would use them?
If you regulate the gates and people cannot really exit some of these decentralized systems because governments make it impossible to convert into fiat, then of course.
So there are some limited markets where people will use those values. I mean, it's an interesting discussion to what extent. I have to say, I mean, people often say, well, of course you see the black market and criminals will, but if you look at Bitcoin trading, it's clear there is not enough illegal activity going on. If Bitcoin really was being used for the international drug trade, it would be billions of transfers every day, and it isn't.
No, because they still prefer, of course, the high denomination fiat notes.
Of course, there was a fantastic story in the English newspapers a couple of weeks ago. There was a story. These guys were arrested. A drug dealer who was, I think, Eastern European, was handing money to an Asian money launderer. This is in a supermarket car park in the south of England. £300,000. And I'm thinking, have these guys never heard of Bitcoin?
Yeah.
They've never heard of Zcash.
Monero.
They're still going around with carrier bags full of £50 notes, €500 notes, 1,000 Swiss franc notes. So look,
but the Russian hackers allegedly did use Bitcoin, it seems.
which was the stupidest possible decision you can imagine, because now there's an immutable record of where they got the money from and what they did with it. I mean, in fact, actually, if we didn't tell if we could persuade all criminals to use Bitcoin, that would be a social good. Because right now, criminals use $100 bills and we have no idea what they're doing. If they would use Bitcoins, at least we could see what they were spending the money on and who they were sending it to. So look, so at this lower layer, yes, there's a certain limited market, but actually for most people it's not. Then you have a kind of institutional layer, which takes those underlying values and links them to real world assets. And this is what the banks and the investment banks would do. So down at this low layer, we're just moving numbers around. Number goes up, number goes down.
Yeah, simple ledger.
What do those numbers mean? Nothing. At the next level up, institutionally, I'm a bank, and I say, those numbers, those represent euros. Those numbers represent this land. Those numbers represent that painting. Those numbers represent some real world asset, and I maintain the institutional link between those numbers and the asset. And now we can trade those assets. And then a layer above that, as you've said, you have this kind of market layer where you have rules, where you have KYC, AML, CTF, PEP. And now those assets are traded in a regulated market. And most people, most of the time, will want those assets traded in a regulated market. You know, one thing that's quite puzzling is sometimes when you talk to people at Bitcoin conferences, and they say, well, you know, because they don't like the idea of having institutions and this kind of thing. So they say, well, look, it's dynamic, it's exciting, it's like the Wild West. And I can't resist saying, you know, if the Wild West was all that, we'd still be living in it. I mean, there's a reason why we don't want to live in the Wild West, right? I don't want to have to defend my crypto key and shoot people, and I want my crypto key stored in a bank. I want it regulated by the government. If bad things happen, I want something done about it.
Yeah,
you know,
but it's exciting because it's like a precursor to a new reality. And of course, it's messy at first, but at the end of the day, it will usher in a new era where the stakes are different and where there's more power to the people and less power to the institutions.
True. And I think, you know, societally, we have a very interesting set of choices to make around that, because there are certain key technologies which, when used in this kind of shared ledger context, allow us to do things which are counterintuitive, which the regulators don't know and don't understand. Now, I'll give you a very good historical example. We're sitting in Amsterdam 30 years ago, you had David Choe and DigiCash, you know, one of the precursors to Bitcoin. And that used a technique called cryptographic blinding, which meant that you could have these coins that were digitally signed as being valid, but because of some clever cryptography, you couldn't link the coins to people. Very counterintuitive that, you know, I could give you something, some asset, you could digitally sign to say that it's the right asset, you give it back to me, and through some cryptographic magic, I can make sure even you don't know that it's me. It's completely unlinked. And now we see a similar kind of thing. We have things like homomorphic encryption, which is computations performed on encrypted values. We have what I think is one of the most interesting technologies, the technology at the core of Zcash, I mentioned in the book. I think Zcash fascinates me because I think the zero-knowledge proof technology that they use is the foundation of a next generation of cryptography. And again, as a regulator, this idea that you can prove to me that you're over 18 without disclosing who you are, and actually making it cryptographically impossible for me to find out who you are, that's hard to think about.
Yeah.
If you understand the maths and cryptography, it's fantastic, it's clever, but if you don't understand that, it's magic.
Yeah, that really ties into the whole identity discussion. Maybe before we talk a bit more about that, in your book it's clear that before Babylon, basically saying Babylon is the archetypical example of how we used ledgers and clay tablets. But even before Babylon, of course, we had other ways of, we used memory within our tribe to understand who owed what, and that was a way to keep track of scores in a way. And the title also says beyond Bitcoin, and that's something you alluded to just now, is like the banks, for example, or institutions, companies, they're waiting for for a next phase where things are regulated and allowing them to build on top of this?
Well, I started to make the thought experiment. So once I was sure that the technology all works, I mean, this is a few years ago now, remember? I mean, Bitcoin's been around for a while now, and before that, Hashcash and DigiCash and so on have been around for a while. So I started to think, well, okay, this all appears to be correct. So anybody can create money. Anybody can do a Bitcoin fork and create their own money. And so then I started to think, well, if anybody can create their own money, who would? Like, would really every single person create their own money? That doesn't sound quite right to me. It's possible, but I'm not sure. So would money continue to be a creature only of the nation state? That seems very unlikely to me, especially when the nation state is under, political pressures.
So Herman Minsky said, right, everyone can create money. The problem is not creating money, the problem is getting it accepted. Yeah.
So I started to, and this is when I came up with the 5 C's idea, which is in the book, which is, okay, so if anybody can create money, let's think of the different kinds of people that could create money and see how that works. And so I went through, I look at the examples of commercial banks, which is how money is created now.
So the first C is commercial banks?
Yeah, so essentially we could use the technology to basically keep things the same as they are now, which is unexciting, but could potentially reduce the cost of the market and the cost of regulation. Doesn't really deliver us anything new, We could look to central banks to issue digital currency. So, and actually central bank digital currencies are a topic of a lot of discussion at the moment. This week, I just saw the new paper from the Bank of Finland. Before that, we had the Bank of Canada, the Bank of England, the Bank of International Settlement. I mean, a lot of people are looking at central bank digital currency.
And the Central Bank of Ecuador tried it even without success, but so...
Well, that's strictly, that was a currency board.
Yeah, but at least it was the central bank issuing wallets and to
yes.
its citizens directly.
Well, that's a good example of where the transparency of the blockchain could be transformational. So if I was an Ecuadorian citizen and the government says, we have a 100% US dollar reserve against this money we're issuing, I'd be like, fine. If I can see that there's that 100% reserve is there, fine, I'll use the tokens.
It's like Tether at the moment.
If I can't see that, I would be very suspicious.
So to see central banks, commercial banks, they're a bit boring because central banks.
No, central bank is not boring. I think people again, because people don't spend much time thinking about money, they don't think about how these things work. If you had a central bank digital currency, that would have tremendous implications for the commercial banks, because the business model of the commercial banks, which is based around credit creation at the moment, it would be problematic.
Yeah.
Sorry.
But if I like it, in a way, it's of course it's changing your physical notes and coins into a digital equivalent.
And there are lots of good reasons for doing that. Make the economy more efficient, stimulate innovation, but it would have a serious effect on the commercial banks, and that has to be thought through.
And that's why they're hesitant they're not that eager so far, the central banks,
Correct.
to actually implement it, because
Correct.
they've been talking about it for years now.
But also because central bankers do understand money, they realise that if they created a central bank digital currency, everybody would take their money out of the commercial banks and put it into the central bank, because there's no risk, the central bank digital currency instead. And then the commercial banks, because they would no longer be able to create credit, they have to draw in the deposits to lend out to other people, would then have very different business models. So it's interesting, but not obvious that it would happen. The third example I looked at was, then I thought, well, okay, suppose we took the privilege of creating money away from banks and just let any company do it. What would happen if any company could create money? And there's a lot of literature around that sort of thing, actually. I mean, I'm not the only person who's thought of this. I'm far from being the first person.
You cite De Bono often in your book, you see.
De Bono is a very interesting case. Edward De Bono, who in English, we know him as the father of lateral thinking. He invented this subject of lateral thinking. And in the 1990s, in the early 1990s, a long time before the internet was everywhere and electronic money was everywhere, he wrote a very fascinating piece called The IBM Dollar. And he was a very clever guy, and he was doing the same thought experiment. He was saying, well, wait a second, suppose there's some kind of network. If all companies are connected together on all of this network in real time, so there's no credit risk. Would they use the intermediary of money? And his thing was, well, if you don't need money to store this memory, as you said, then why wouldn't companies just trade directly using baskets of other assets, commodities and other assets? And I think he's right. I think he makes a very interesting case as to why this would be true. So we could be heading into a situation where everybody could create money, but actually it's companies that create money. And the reason why we as individuals would want that is because we want people who are held accountable. Like if something goes wrong with the money, I want something done about it. I want somebody to complain to.
Yeah.
I want someone who's regulated. Well, that could be any company.
But take the example of IBM. Maybe IBM is not the biggest or the most impressive company at the moment anymore. But let's say if Google or Apple would just people could use the shares in Apple and Google to
Essentially,
pay.
yes, exactly.
So in a way,
and
Apple share is already an Apple dollar.
And this is, I mean, I don't want to go back to the tokenization issue, but one of the interesting discussions in the tokenization debate is the extent to which tokens can change their function over time. So, don't use Apple. So let's say I'm going to create Daveco, which is a dam for renewable energy. So at the beginning, the tokens function sort of like securities because you're contributing to have a share in the revenues of the dam. Over time, the renewable output from that dam becomes desirable. Lots of people want it. So your tokens then become utility tokens that give you access to that energy.
So we could pay each other in the future in energy coins. That kind of makes
Correct. And
more
then
sense than being dependent on the petrodollar.
And then everybody wants them. They become liquid, and then they become payment tokens. And I think there's something to that. That strikes me as being, like, I'm not smart enough to know how that's going to work out, but I can sort of see that's a bit like Isaac Newton coming along and saying, well, wait a second, guys, forget the silver coins. What if there was a central bank? Actually, he never said this, but let's have a central bank and paper money and a gold standard instead. It seems to me to be similar.
Do you think for commercial banks, the central bank is a bigger threat or the other C, the company coins?
Well, it depends on regulation. I mean, the shape of this sector is determined by regulation, not by technology.
And it's paid for by commercial banks usually.
It depends what the regulators feel will lead to the most stable. I mean, I think there's an ecological argument which says what you need is lots of different kinds of money.
Yeah.
So if one kind of money goes wrong, it doesn't matter. We've got lots of other kinds of money to use.
The Bernard Lietaer argument.
Yeah.
Resilience is you need to strike a balance between resilience and efficiency.
We don't say resilience anymore. We say anti-fragile because of the Taylor thing. But yes, you're correct. That's that line of thinking.
So there's 3 C's, a 4th C. What's that?
Well, then I started to think, well, okay, hold on, wait a minute. What if all this thinking is wrong? What if actually the Bitcoin people are right? What if actually it's just cryptography that issues the money? There are no institutions to go around. Could you think of niche applications, like I was going to say like money laundering, but that's not a niche application. Is it possible there will be some currencies that are like Bitcoin? They're just created by cryptography. They have and people use them because they have certain desirable properties or characteristics, such as anonymity, for example.
Yeah.
And so I thought, okay, well then that would be a 4th C, would be cryptography.
Makes sense.
My personal opinion is that would be very small, but I could be wrong. It might turn out that people can invent clever new cryptocurrencies that do amazing things, and people prefer to use those. I mean, of course, the regulators we might not want that as a society, because as a society we might think, if somebody does invent a large-scale, highly efficient, liquid, completely anonymous cryptocurrency, then as a citizen, I might be very unhappy about that, because I think, well, anonymity rewards the rich and the powerful and allows them to, exist and work beyond democratic control.
But the counter-argument would be that anonymity also gives journalists the opportunity to reveal dirty secrets about powerful people.
Correct.
It would also give you some. It's nice not to be part of the whole big data dream and keep certain bits of information to yourself.
Yeah, although of course the negatives of that might outweigh the positives. But it's a valid discussion to have. But nevertheless, I can't help feeling the cryptography will be a small part of it, because in my imagination, the main use of the cryptocurrencies will be to support the token economies that sit on top of them, which, by the way, if that's right, and those token economies do grow in a regulated environment, then actually the existing cryptocurrencies that we have now can't support them. So that's another argument in favour of seeing more cryptocurrencies evolve from that Bitcoin family tree.
And then the fifth would be...
Well, the fifth, then I was going back to thinking about people again, and I started to think, well, okay, what if it isn't companies? What if it's people that, and then I thought, but would individual people do this? And at the time I'd been reading some stuff about, I was reading a lot of social anthropology, because I think if you're a technologist, to try to understand the implications of technology, you have to go to the social anthropologists and read what they've studied about the impact of new technologies and so on. And there happens to be a very good book about the history of money.
Graeber.
Called The History of Money, actually, by a guy called Jack Weatherford, who's a social anthropologist. And I happen to be reading this. And he made a point which really stuck with me. And he said, not in that book, but in another article, he said, the future of money looks more like money in the Stone Age than the money we have now. And what he meant by that was local. What he meant was that the memory, because you can now implement it technologically, that allows the clan to survive, where the sort of mutual obligations within the clan are all remembered. You don't need money as an intermediary, because everybody can remember who owes who what. You need to mow my lawn, I need to fix your house, you need to milk my cow. We can remember all of those, so we don't need money. And his point was, well, because of social networks and mobile phones and always-on communications, we're actually going back to that.
So we're going back to Neolithical times.
And then when I read that, I thought, I think the guy might be right. I think actually the more I think about that, the more that seems right. The difference between then and now is then we lived in one clan, right, which was geographic. Whereas, of course, now...
It's a virtual clan.
We live in lots of different virtual overlapping clans. So I started to think, well, clan's probably the wrong word for this. And I started to think about the sort of online communities that we exist in. And the more I began to think about that, I began to think, well, perhaps this is the radical implication of the new technology.
I happen to agree with you. I also think that we are much more now... of course, it's still very important where you live physically, because of you have neighbors, you live in the city.
Demographics are...
and that's why there's probably still space and demand for sovereign or like geographical coins. Could be a country coin like a dollar, or a supranational coin like the euro. But yeah, why not have your own coin amongst a community of kindred spirits across the world?
Exactly. And you can see an argument which says you could have communities constructing, I mean, they would use cryptographic technologies to do this, but they would construct money which minimizes the transaction costs within a community, possibly by linking it with identity in some way.
So the fourth C is more of an enabler. Cryptography is more of an enabler for the other Cs.
Well, of course, when you think about the communities, then you begin to think, well, actually, the central bank is like a special kind of community for the nation. And the cryptographers, they will have little communities. And companies are a kind of community too. I'm a member of the British Airways Frequent Flyer Club. I mean, that's a kind of community too. And so then the more I began to think about it, the more I started to think, I wonder if these communities really are the way forward. And I began to explore that argument. When I was exploring that argument, one of the things I kept coming back to, because I was trying to think of examples, so which communities would I value the money, which monies would I want? Which, of course, in a way is a silly way of thinking about it, of course, because it wouldn't be me that was choosing that portfolio of currencies to hold. It would be my AI robot.
Your bot,
that would be doing it. And I kept coming back again and again. You said geography. There is one particular kind of community which is rooted in geography, which every article about the future I read tells me is increasingly important. The World Economic Forum say this. I mean, everybody says this. And that's cities. So the future economy is more and more oriented around cities. You see this very clearly in the UK, there isn't really a British economy. There's an economy of London and like the hinterland of London. You know, there isn't an American economy. There's the economy of New York and its hinterland, the economy of Los Angeles and its hinterland, the economy of Chicago and its hinterland. And as the population gradually shifts into cities, certainly demographic assets like the right to reside in a city, the right to have a parking place, these kind of things, become very valuable assets. And so, and that's, I know it sounds a little crazy when you read through it the first time, but I think if you reflect on the sort of the chain of thinking, I think the argument which says communities will have a central role to play in the future of money, and within those communities, cities will have a particular role, I think there's a logic to it. Now, after I wrote the book, of course, I see the first couple of cities beginning to issue tokens. So
I used to live in London. There we had the Brixton pound.
Yes,
it was
well,
like
those
it was not a
things-
city, but it was a sub-city coin in a way.
Yeah, those things could be, they're quite economically inefficient when they're pieces of paper, but those things could be reinvented in a token space. And then I read just a few days ago, I saw the mayor of Seoul in South Korea wants to create a Seoul cryptocurrency.
Sounds nice.
So-
The Seoul currency.
So I think some of my logic is correct.
But on the one hand, we see technology enabling us to create all sorts of monies. So Friedrich Hayek would be very pleased to see the proliferation of so many different assets or coins. But so far, most of them don't really seem to have a very long future. And at the same time, we see, because of winner takes all dynamics, certain companies and fiat currency grow ever bigger. Like if you look at what we described in the beginning, if you look at Alipay and WeChat Pay, how big they are in China. If you look at the dominance of the dollar, so in a way, these forces that are stronger than the possibility we now have, for now at least, to create all sorts of alternatives.
Well, I mean, those are interesting examples you just gave, but they're two quite different examples. So if WeChat and Alipay win, everybody uses WeChat and Alipay for everything, or Apple Pay or anything else, doesn't matter. The cost of switching currency is negligible. It's just a menu item. If I decide to store dollars or euros, renminbi or IBM currency, it's nothing. It's a menu item. So the more ubiquitous those electronic payment mechanisms become, the easier it is to have different kinds of currency in circulation, particularly once you take away the paper stuff.
If the Chinese government allows that, of course.
Yeah, but if they don't, somebody else will, and then you get these, which I think is realistic, not a science fiction thing at all. Then you start to get these currency competition wars, effectively. And there are plenty of companies, Apple is one of them, for example, that has more money than a lot of countries do. So I don't think that's crazy at all. I think it's quite a logical thing. And I think for an individual person, like for me, you know, I could go and open a broker account and get some Apple shares and manage them as part of a portfolio. I mean, I don't, because all of my sort of pension money is in funds rather than individual stocks. But I mean, I could do that. But you know, the idea of having my pension wallet, and I put some Apple money in it, and I put some Google money in it, and I put some Ford money in it, that's not crazy. And because some of those tokens would become utility tokens, you can even see the economic rationale for doing it, which is I know that when I retire, I will need water. So I could put euros in my pension fund, but I don't know what those euros are going to buy in terms of water downstream. I mean, I'd hope they'll still buy some water. But the alternative, of course, would be, okay, I could just put water in my pension scheme, you know, and electricity. And
water is actual liquidity then.
liquidity, yeah.
Yeah.
But you see what I mean?
Yeah.
It sounds funny to talk about those things, but when you begin to think about it, it's actually not crazy at all.
As long as you have the right technology available to easily exchange between those assets and seamlessly transact with each other.
Which you would hope that token
Yeah.
marketplaces would allow
Yeah.
you to do, because they'd allow you to do that at low cost and create very liquid markets.
And it's highly fascinating. Maybe I was a little bit too optimistic to think that we could cover both money, payments, and identities in this conversation, but we've already been talking for like 45 minutes. It's crazy how fast time flies. But maybe
We'll do identity.
we
next
do
time.
identity next time. At least the world of money and payments looks very interesting in the future to me. I also believe we're going to, hopefully we're going to a kind of a diversified world where we don't depend too much on a very powerful act or a very powerful alternative, but that we have many different things to choose from. And I think it was enlightening to hear the different options available. Anything you want to add to the conversation?
Well,
Where can people find you online? Because you are a very active Twitterazzi.
Yeah, it's a character flaw. I can't resist arguing with people on Twitter. I enjoy it. It's all at www.dgwbirch.com.
That's easy. dgbirch.com.
dgwbirch.com.
dgwbirch.com.
Thank you.
Great. Thanks a lot, Dave. That was really interesting.